Buffett bought 20% of the above ground silver supply. Think about that, 20%. Most of it came off the COMEX. You couldn't do it anymore. There's position limits. And yeah, I know Craig Hemphill and others say that they exceed the position limits. And he's correct, they do. But they would never let you exceed the position limits like Buffett, where he got 130 million ounces off of the COMEX. That wouldn't happen again. So the point is this. It was less than 2% of Berkshire Hathaway's holdings. So 1/5 of the world silver supply was not reported in their annual report. It was a line item called miscellaneous. And by law, it was exactly correct. So I wrote an article for my subscribers at the time about how small the silver market really is. Because you have this one, Fortune 500 company. It meant nothing to the bottom line of one company, yet it meant a whole lot to the physical above ground supply.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have our returning guest, David Morgan, also known as the Silver Guru, joins us this Wednesday, April 21st, 2021. David, thanks for coming back on.
Dunnigan, I always have a blast with you, really, so let's get on with it. I'm sure you've got that battery of questions, and I'm ready.
Yeah, we do. And it was great because we've known you for a long time. We met you at the first Liberty Mastermind Symposium in Dallas, Texas, back in 2012 timeframe. And it's been great having a partnership since then, having you on frequently. Our guests always submit lots of questions prior to your arrival, so we're going to have the rapid round of questions in just a minute. But first, the big topic of the day, and this is going to be, folks, very present in the alternative media and independent media for the next 2 weeks, and that is a silver squeeze of grassroots in nature, just like the one that happened at the end of January through the WallStreetSilver and the Reddit crowd. This one's coming again, and this will be happening in the next 9 to 10 days, and it's going to be coinciding with the 10-year anniversary of the 2011 smackdown of the silver price that happened, where the silver, among other things, within a period was smacked down by $6.50 an ounce. So figure out how that happens in a natural world. Anyway, we'd like to get your thoughts on that phenomenon of the coming grassroots retail investor silver squeeze, and within the backdrop, if you could help us know, that's prevailing in the markets for other bigger fish who have been removing metal from the COMEX and the LBMA and other venues for the last maybe more than a few years. So can you talk to us about the silver squeeze and what we can look for in the next few weeks?
Sure. First of all, I'll just backtrack a little bit to the May 1st peak and then subsequent fall. Silver had gone parabolic, and I was getting ready to call the top, and actually I called it, I think, 2 days before that top. We got in at 19 and got out around 48. So that was actually we got in at 19. I got out at 26, then QE2 was announced. I got back in at 26, maybe slightly lower. I forget. Basically just got back on the train, rode it all the way up to 48. I could see it, just looking at a parabolic move. And secondly, the big clue was the margins got increased and increased again and increased again. And if memory serves, I think it was 4, maybe even 5 times. So I knew from the 1980s, whenever the exchange starts to increase margins, look out, they're going to force a lot of people to exit their positions. And so that's part of the reason that it took place. As far as where we are from a big picture perspective for 2021, the funds continue to buy. And right now, from what we know from data from the Silver Institute, we know that the amount of fund buying for the first quarter of 2021 is pretty close to on track to be what it was in 2020, which means an extremely large amount of physical silver going into the ETF. Now, we can argue about the SLV. I've already written a couple things about it and talked about it. I'd kind of like to skip that. But as far as institutional money, 2020 was the year, and 2021, forget about it. It's not true. So far, it's only 1 quarter into the year. The funds are definitely buying physical. And then the retail side looks to be on track to pretty much match what we saw in the first quarter of 2020. So in other words, with only a quarter of the data in for the year, we're pretty much on track to match what we saw in 2020, which is huge. I mean, we saw a huge amount of silver physically go into investors' hands in 2020, over 500 million ounces, somewhere around 550 million ounces. So that's a good sign. As far as the buy 100-ounce bar, buy 100 ounces of silver, I'm all for it. But I was with Max Kaiser in France, and he came up with the buy silver, Barry, what was it? I was with Max Kaiser in France, and he said, buy silver, take down JP Morgan. In theory, it could happen. It never did manifest. Am I leery about this one doing anything? I don't know, because it depends how many participate and what the margins are, how much excess, quote unquote, silver is available in physical form to meet the demand. And we don't know. I will guess that there's sufficient silver supply to meet the retail demand to maybe force the price somewhat higher, but probably not to break the banks.
Now, we'll be staying on top of that story. We'll be interviewing some of the guys. We just interviewed the guys from Wall Street Silver last week. Probably have them back again. Probably have Craig Hemke from TF Metals Report and others back on to talk about this in the next week. So everybody, please stay tuned and be alert as we approach May 1st. We have a question here from Kevin Reed, who says, David, what do you look for to identify the event which will trigger the breakout in the hold of silver pushing it above $30?
Technical. I mean, I'm not a technician only, but, I've always said the market knows more than me. And so I just did an update for, I think it was a money show yesterday. And the line came in around 28. It's an art form, not an absolute. But if we get above 28, basis the near contract, the front month, the spot market, and we see 28 on above average volume, and it stays above 28 3 days in a row, then we have a position that suggests that we're on our way. The probability is very good if you meet those parameters. 3 days in a row and above average volume at a breakout level. So that would be what I'm looking for. Will that be next week, next month, next year? I don't know. I don't think it's next year. I do think we've bottomed, but, I've always been ridiculed for, saying there's a bottom. I'll have to digress, but I called a bottom at 1844, I forget how many years ago. And that was the bottom for 14 months. And then it broke down below that. So, the trolls came out. So I should say that could be the bottom anyway.
Sure enough. It's interesting because we just interviewed Alistair McLeod this Monday, and he said that it looks to him as though gold and silver are not going to go lower because there's certainly been a lot of pressure on them that pushed them down. Gold, peaked back in July, August at, over 2,000 and silver around 30 at end of January there. But it's been interesting to watch the silver climb back up from just over $24 an ounce, a week ago to high 26s now. So it's interesting to see it climbing out of the pit. We have a question here from William Davis who says, David, when the stock market corrects or crashes, how will the mining stocks be affected? Do they crash right along with the Dow, or will miners recover better compared to the general market?
Yeah, that's a question I get the most often, and I don't get tired of answering it. Yeah, generally, all of history shows in a big sell-off, the miners go down with the general market. But if it is a big sell-off in the general equity market, the miners are the first to recover, or one of the first to recover.
What do you think is behind that phenomenon? You mentioned before that there can be margin requirement changes on the overall on the commodity exchange. That can also happen in the on certain stocks, even within the equities market, in the stock market, brokerages can actually change the margin requirements for specific stocks that are considered more volatile or whatever. But what do you think is driving that phenomenon of more mining companies being hit down with a correction in the overall market, but then recovering differently from the main market?
Well, to sound trite, it's selling pressure. So when money manager, for example, or a pension fund manager, they usually have a gold position or a gold stock position, or at least an ETF, and they might be getting a margin call or may have to make a margin adjustment. So they'll look at the portfolio, they'll sell anything, and if gold or gold stocks or the GDX or GDXJ or the SIL or whatever is in their portfolio, it may be up, on that first initial fall, or maybe up the next couple of days. And then they're just going to liquidate to, make good on their overall positions. So that's the reason. There's a lot of selling pressure of everything for the beginning of it. And then again, if it turns out to be temporary for the stock market, and the stock market catches the bottom pretty quick and starts right back up, then the miners will come back up with them, but not in a robust manner. Whereas if there's a bifurcation where miners start to come back up and there's a continued sell-off in the general equity market, you'll see it. You can look at the 2008 financial crisis, and you can plot like GDXJ or GDX versus the S&P. You'll get a good idea.
Okay. There's lots of questions on this. They come up month after month, year after year, but like your current take on it, Voy Girl 1954 says, do you think that silver could be confiscated by the government? She's asking about the Canadian government, but you could, if you want to split your answers, Canadian versus U.S. or in general.
Yeah, this question comes up from time to time. I doubt highly that silver will be confiscated. There's no bank in the world that treats silver as a monetary asset, and they do treat gold as a monetary asset. So I think that it's almost impossible. First of all, to do any good, it'd have to be something of value to the bank, meaning that the price of silver would have to make up an astronomical number, $100,000 an ounce, $250,000 an ounce. In other words, it would have to have enough effect to be worth confiscating. Now, we could get in a situation where we are like palladium, where the total industrial demand is driving the palladium market. That's why you have actually a free and fair market in palladium, because you have to have it for catalytic converters, and there's no ifs, ands, or buts about it, and there really aren't any substitutions. Platinum can be substituted, but it hasn't been done yet. So will we have enough of a driver for silver where it's just industrial demand? No, we won't. I doubt it. I'll put it that way. But we could get in a situation where the industrial demand becomes necessary for, green energy, solar panels, or whatever. And it's possible the government could do a nationalization like they did with gold in the 1930s. We are going to pay you, X amount for your silver. Be a good patriot. Turn it into us. We know what to do with your silver better than you do. And of course, most people would probably ignore that. The only way that they even get a little bit of silver in that kind of mode would be to pay something really significant, like the close on Friday. The government will pay 30% over and no tax, but you have to turn it in between the 1st and the 30th of the month or whatever. And I'm just making this stuff up. I don't expect this at all. I don't think it would ever be confiscated. If they really needed it, they wouldn't confiscate it from us. They would go to the ETFs. They'd go to London. They would make a deal. They'd ship it out. That's where all the silver is. So why hunt around for it with somebody, that's got a few coins or a few bars or a lot of bars, when they can just go to the ETFs and take what they want. So I doubt it highly.
Now, back to what you were talking about earlier about the demand on the exchanges. Shays says, David, based on the silver, 215 million ounces went to physical investment in 2020, roughly a quarter of mining production. What do you think physical investment will end up in 2021?
Well, we started the program with that. It's on track to match this year.
And he follows up, if you had to guess, in what annual level of that physical investment would we see a breaking point of the silver market?
Again, $28 an ounce. If we get above there and stay there 3 days or so on big volume, I think we could see 30, 40 this year. We could even see higher than that.
I think he's not maybe asking about a breakout, but a breaking point of the silver market, meaning the ability to deliver physical on the major exchanges at what level of demand in ounces per thousand, ounces per year.
No, you're right, and I get that, but I don't have an answer for that really. I mean, you're right, Dunnigan. It has to do with some physical demand somewhere, like a mint that's going to take unallocated and fabricate it for a fee and send it to the person as an allocated piece of metal. Uh, if they get so backlogged or whatever, and you start to see more and more defaults, I think that will stir the market to the point of where there may be a run on the bank, people that have even allocated accounts, because we don't know for a fact, and I certainly know better as an engineer to make one data point an example. But there are a couple of data points, and very few right now, that some of the allocated accounts are run on a fractional reserve system. So if that comes out, and people that have paid for the metal in whatever form, 100-ounce bars, for example, stored it with XYZ depository, paid storage for 5 years, and they say, you know what, I'm going to store it at home, send it to me. And the agency says, sorry about that, we can't do that. All we can do is send you a check. You start seeing more and more of that. I think you're going to have some very upset silver investors, and that could be the kind of event that you're referring to that could set the market on fire.
Within the context of our fiat currency environment, where some analysts are claiming we have no visible inflation yet because the money velocity is too low, and others like John Williams from shadowstats.com says, no, we've had 6 to 10% inflation year over year for the past decade. We have this question from PV who says, what exactly does have to happen in this country or outside this country to think that a Weimar Germany inflation is possible?
I don't think it is. I mean, there is an inflationary depression that could take place without hyperinflation. Just think if food prices doubled, but everything else stayed the same. That would probably be enough of a cost push inflation where everybody eats. So that could be a triggering point where people start to see that quote unquote inflation and make a determination that they're going to use their savings to buy precious metals or use their savings to buy more food for the future. And what would have to happen in the advanced capital markets, that would probably take interest rates away from the banking system at large. Of course, they claim they only set the discount window in the federal funds rate. And in theory, that's true. But with all their agents that participate with the system, they have a pretty good control on interest rates. Having said all that, I don't think you would see it, because if you get a big push into, hey, this dollar is not worth very much, and if it's only worth, it's losing 10% a year, and I don't want to hold on to it long term. I demand an interest rate that's commensurate with the loss of purchasing power, and interest rates get forced up, then bond prices go down, which is pretty deflationary. So there's sort of this balancing mechanism to take place. And, as an Austrian, I'm not supposed to say that, you can have both, but in a way you could see prices for goods that we need, like commodities, shooting much higher, whereas stuff we don't need, like the newest iPhone and the bigger flat screen TV or the new gizmo on the next automobile, those items don't really get purchased.
We have a question here on the ratios between real things. In this case, metals and real estate. Paul Pancora says, how do you see the ratio between metals prices and mortgage rates in the next 2 to 5 years evolving? If central banks lose control of bonds in the time frame, the metals should rise sharply, allowing homeowners to pay off their mortgage or renew and purchase real estate at a depressed price. So what's your view of people who are trying to figure out where metals versus mortgages and real estate are likely to be going in the next half decade or so?
Yeah, that's a tough one. It used to be a little easier, but right now, what you've got to think about is, what is the debt service? I mean, when you buy a mortgage, you're renting money, and the interest rate is the price you pay to rent that money. So you're renting that money for a 15-year mortgage, you're renting that money for a 30-year mortgage. And you've got to look at what the total cost is to you to pay it back. Of course, very few people make a real estate investment and think they're really going to pay it back. They're going to hold it for 4 or 5 years and then flip it. Nonetheless, I think we're going to see a point in time, not this year, where the metals actually make up for all the lost time that they've been kind of meandering in these trading ranges and go significantly higher. And when that happens, then you could take, as I just interviewed Jeff Clark from goldsilver.com on my mastermind series, and he gave the idea, Mike Maloney has said a few times, that, 3 monster boxes of silver coins buys a median family home, you're probably at the top of the market. So he used that ratio. So I think, you could play the interest rate and do what he suggests. That's fine. If you're conservative, you might just hold on to silver. I was asked a long time ago from one of the guys at one of the early conferences, well, shouldn't I just borrow a bunch of money and, buy gold with it and then sell the gold and pay off my mortgage? And the real answer was yes. But I didn't give him that answer. I gave him the, what guarantees that, gold's going to go high enough, or what's your income flow that you can service the mortgage if things don't go your way.
Mm-hmm. All right. Now, the next couple of questions regard the health of mining companies. You analyze mining companies at the Morgan Report. I know you and David Smith go out and do field surveys and trips and all that kind of stuff, and you look at the numbers of mining companies. This one's Jerome Janison says, I'd like to hear your thoughts on another front for the battle of truth around silver, and that is, what if silver producers form a cooperative like OPEC after being victimized repeatedly by a ruthless predatory cartel and defenseless because of toothless regulators? So do you think there's any promise there that perhaps mining companies should try to regulate or moderate their output in order to maintain some kind of not stop feeding the supply into this market? Because I just remembered we were talking to Keith Neumeyer and Rick Rule, and they were saying they see a massive metal shortage coming in anyway, even if the mines don't regulate their output. But what are your thoughts on the ability of miners to kind of stick up for each other, stick up for themselves?
Well, I like the idea a great deal, but I think it's impractical, and here's the reason why. When you make a big enough discovery to build a mine, you do all kinds of studies. One of them is called a PEA, preliminary economic assessment. And by the time you get to that, the mining engineers have gotten involved. You find out how big the project is, how much infrastructure, what the mill's going to look like, if you can have one on site or not, what the transportation looks like. So it's a big project. And once you have the PEA done and it looks like it's profitable, the bank loans you the money. And once the bank loans you the money, you're in their pocket. So, if we're talking about a bunch of small mines that self-funded and, are able to come out without diluting their shareholders very much and are actually producing metal, could you do it? Yeah, but it would be on a very small case, because those type of mines would be what I call burrow mines. Those would be producing, 2 million ounces of silver a year, not 20 million ounces of silver a year. So I like the idea, but I just don't see it happening in the current context of where we are with the banking elite.
All right, here's a related question from Kevin Kilgore, who says, why is copper skyrocketing? The miners are being practically paid to give away silver now. How? Here's how. Silver ore. Silver-bearing ores typically contain very little silver, with much higher percentages of copper and lead, so the inflated price of copper allows the mines to get paid while the silver stackers are not getting paid. So can you talk to us about the economics of multi-mineral mining, where it maybe is the copper paying the bills these days on some of these silver mines? Is that the case?
Yes, it's one of the problems with silver. If you look at the books and study them, if you look at like the annual report of, say, RTZ or one of these multinationals that mines, tons of all metals. I actually did it for RTZ probably 15 years ago. And they produced at that time, I don't know what they produced now, I haven't looked at it in a long time, but they produced about 20 million ounces of silver a year. And they just use it as a credit to other, mining activities. So they really don't care what silver's, worth. They just look at it as something they get out of the ground, and it's a credit to their accounting system. So they just give that book entry to the bullion banks, who in a lot of cases will actually take the physical, and they're just done with it. So I also looked at it and I said, well, 20 million ounces silver, that's a lot more than I've got. What happens if silver's $100 an ounce? And it didn't change the bottom line hardly at all, which I have to digress to talk about Buffett. And Buffett bought 20% of the above ground silver supply. Think about that. 20%. Most of it came off the COMEX. You couldn't do it anymore. There's position limits. And yeah, I know Craig Hemphill and others say that they exceed the position limits. And he's correct, they do. But they would never let you exceed the position limits like Buffett, where he got 130 million ounces off of the COMEX. That wouldn't happen again. So the point is this. It was less than 2% of Berkshire Hathaway's holdings. So 1/5 of the world silver supply was not reported in their annual report. It was a line item called miscellaneous. And by law, it was exactly correct. So I wrote an article for my subscribers at the time about how small the silver market really is. Because you have this one, Fortune 500 company, however you think of Buffett, I'm not a huge fan anymore. But regardless, it meant nothing to the bottom line of one company, yet it meant a whole lot to the physical above ground supply.
Huh. We have a question here from Robin Kelly that I'm not familiar with. It says he's heard you mention Liberty silver dollars and Bernard von Nothaus. Can David drill down on this silver movement in the 90s, which was brilliant?
Well, I met Bernard a few times. What a character and a lot of energy. And as far as I could tell, a truth teller. I was concerned when I met him, the way he was manufacturing his silver rounds, putting the government type of logo on there or imprint.
Oh.
And I said, I think you're treading on, lightly here. You may end up with some problems. And he sort of blew it off. But he did get in trouble. I mean, the whole thing was a big ruse as far as I'm concerned. But, the government wanted to, at that time, make an example out of somebody or him specifically and made a big deal out of it. You can look it up on the internet. I don't have all the facts in my head filed very well right now. But, it was the Liberty dollar. You can't call it a dollar. You can't use a dollar sign, and I warned him. And was I right? It's not about me being right. I just thought his heart was in the right place, but he was treading lightly. And I found out that the Treasury Department didn't like it either.
It was fascinating. We interviewed Dr. Edwin Vieira, constitutional attorney, about several topics, including sound money, a couple months ago, and he talked about the history from the colonial era to the newly formed United States, and he talked about how the government minting was in some cases done where people would actually bring metals owners would bring their own metal and basically have it minted for them by the government mint so that it would be standardized, so that then people would trust it and they could say, see, this is come from the government mint. But it wasn't that the government was creating money out of thin air or anything like that. It's like the real money already existed in real metal, and it was just being standardized, being basically published in standardized forms by the mint. Do you have any additional it was a real mind expander for me, because when my son, whom Elijah, got me into this in the first place, it started all from a homeschool kid asking me, where does money come from? And that got us down this rabbit hole that led to you and so on. But what about that origin of the valid constitutional way of minting, since you brought up, government minting, is that actually, what it was? People brought their own silver and they could be minted into standardized forms?
Yeah, absolutely. I mean, Dr. Vieira is one of my heroes, and he wrote Pieces of Eight, which is a 2-volume set that talks about basically the silver market, many other things, of course, but there's a lot of history about silver and coinage in there. I mean, I'm old enough to know that my dad used to refer to, quarters 2 bits, because a dollar was called Pieces of Eight, because you could split that round coin into 8 sections. And you could have 1 bit, which is an eighth, or 2 bits, which is a quarter. And so that would be a $quarter. And now it just so happens, it wasn't a setup, but there's a US dollar right there. Okay. So that's roughly 3/4 of an ounce. Now, if you go and buy a Silver Eagle today, actually it's a Silver Liberty, but everyone refers to them as an Eagle, you get 1 ounce. So the Treasury doesn't even know what the dollar is. A dollar at statute from 1792 is 371.25 grains of 999 fine silver. That's a dollar. It's a weight. If people actually knew the truth, they could walk into a grocery store, or maybe a farmer's market's a better example, and go up and say, I want $1 worth of lettuce. And the farmer would give them, a fiat dollars worth of lettuce. No. I want the weight. I want 371 grains of lettuce. It's a weight. So anyway, I probably digressed too far, but no, you could free mill silver for your own use. And the government took a centerage fee, which is fair. They did it. It was time, it was labor, it was effort. They had to press everything else, so they should get paid. But it was a great way for people to put their own silver into coin form.
Little known fact. I mean, it makes a lot more sense than anything that I've heard recently on where our coinage comes from. Okay, Fizz C says, Jim Rogers drinks from silver cups. Do you use silver for something like that in your household?
Interesting question. Now, I don't use a silver cup, but I do use silverware half the time. So if I eat, my meals here at home, most of the time I'm using a silver fork, a silver spoon, and a silver knife.
My wife and I take colloidal silver. We use Mezzo Silver brand because it was recommended by our doctor, Jay Nielsen, who we've interviewed on that topic. So especially during the whole COVID thing, I mean, we bought, as preparedness-minded folks, we bought gallons of this stuff. And so especially when we're going to go traveling and we're going to be exposed to lots of different, people and germs and everything that we don't usually get to encounter, we bring along a colloidal silver and take an ounce a day several of times for both of us. So that's available too. Any other health-related aspects of silver that you've heard that you think are credible?
Well, yeah, I mean, I did a video series a long time ago. You can get it. You'd have to type it in. It'd be themorganreport.com/silverwater. And I'll bring up this video series I did with two doctors. And I never say anything about, ionized silver water. They do. And so you can make up your own mind. I think there's actually a link to buy it. And I probably have an affiliate with it. So I probably get paid a few pennies if you buy it. It's up to you. I'm not comparing it to the one you have. But the science on it is very interesting. But the government is very, very eyeballs out looking for any of these alt treatments that actually work.
Yep. Yeah, we made acquaintance with an herbalist who lives in Mexico up in an Indian mountain village, and he sent us some herbs that helped my wife's foot. She has a neuritis from our chronic Lyme. And I said, that's great. What is it? He said, can't tell you. I said, oh, well, he said, because if once the word gets out of something that works, it's going to get shut down. So anyway, and it worked. So we will want people to be able to find more of your work. You just mentioned to me that you just were writing a new article. So if people want to get plugged in and find out more of your writing, where should they go?
Just go to themorganreport.com, sign up for the free newsletter, and just hit the blog pull down, and you'll get right to the blog where most of the interviews I post, the writings as well. And the About Us feature has the Four Horsemen film that I think everybody should watch at least once.
Four Horsemen of the Apocalypse. You recommended it to us several years ago. My wife and I watched all the way through. Fascinating. And a lot of stuff that people who've watched shows like this have heard most of those concepts, but people who are new to this would find that just very mind expanding, I think. I want to encourage everyone who hasn't done it to go to libertyandfinance.com, sign up for our free newsletter. It's free, you guys. Just go to libertyandfinance.com, see over in the margin there on the left-hand side, it'll say sign up for the email, put in your name, your email address. We'll get you on our free mailing list. 3 times a week we send that out. It has all of David's interviews, all of our guest interviews, any links, any descriptions that they provide. You won't miss a single episode that way, and it's free at libertyandfinance.com. So David, as always, thanks for joining us on behalf of all of our viewers. Really appreciate you being here on Liberty and Finance.
Always a pleasure. Thank you, Dunnigan.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.